going to try to start implementing some other trading strategies with Fibonacci sequence and the new Elliott wave theory that I'm trying to implement. So I'm going to do 3 charts today. I'm going to start with Nvda on the 30-minute time frame. I'm going to do the US dollar Japanese yen spot on the 30-minute time frame, and the micro E-minis futures on a 4-hour time frame, just to show that we can have a variety of time frames with the specific tool that you would like to trade with. So today we're going to use the PITCHFORK, and we won't use it by itself. We're going to use the our Fibonacci percentages for entries and exits. Okay, so we're still going to try to count waves. So the objective today is how to find a wave, how to spot it. Okay, and the first thing we want to do is we want to establish our support and resistance. So again, this is a 30-minute time frame. This is Nvda, what we're looking at. So I've put the chart back a few days. So we're focusing back in May, end of May, and we're going to find our entry eventually in the end of June. So let's say you've been wanting to get into Nvda, but you don't know where it's going to go and looking for a good entry. So here we are. We want to find our high and low, our support and resistance, and we'll do that by reading the charts from left to right. Okay, so we'll look from past history and establish our highest price range and our lowest price range. So, and you don't have to, depending on the time frame, you don't have to go back, months on end, especially on a 30-minute time frame. So I just took a certain segment here, and we're going to focus on this one, this from May. So first thing you do, you draw these lines, and the next thing you want to do is find your swings. So your swings will tell you your waves, when to start counting your waves. Now, to do that, you want to start reading the chart right to left. Okay. Now I drew out these channel lines right here in red. Okay, this is telling me from here to here is more of a consolidation than a swing. So this is going to help me find our wave, our first wave count. So what we're doing is we're reading right to left till we find our low, and that's pretty obvious. It's right here, right? Because that gave us our support line. So now we need to find 2 more swings. Now, if you remember, in all my videos, I try to implement an ABC count. I'm not counting anything in 5 waves. So all I need to do is find our next swing. So anything that looks like kind of a more projection upward than a consolidation. Hopefully you can tell the difference between a move like this. Oops. Oh, didn't mean to do that. Where am I at here? Sorry about that. Okay. Straighten this up. I had it perfect here because I need to okay, let's try this again. So hopefully you can tell the difference between a consolidation move like this versus a move as such, like this, or like this. So now we've established our low right here and our high. This is our A and our B. Okay. So we're going to go ahead and label our A. Oops. Our A. And our B. Now we're looking for our Z. Now, one thing I've done is measure this pullback here. And I've labeled that it went past the 61.8, so we just, I'll show you here with our extension or our retracement tool. I have this yellow dot here at 61.8, and if it was just a wick or so and it wasn't that far off, I wouldn't have counted it. But you know, we have at least 2 points here that tell me that maybe we're looking for a triangle pattern. This doesn't mean that it's bearish as such, as more as it tells me that I'm looking for maybe a triangle somewhere. So if that's the case, then this B is not really here. It could be over here, and this could all be some kind of triangle. And remember, we're looking for a position to get in Nvda. So we're analyzing this chart, and I keep giving away the answers here. Didn't want to do that. This chart's being real finicky with me all of a sudden. Okay, so just put this right here. Okay, so we could probably label this as an A and maybe a B here, a C, and a D, and an E. Well, it doesn't really matter how you label the triangle. We're not really focusing too much on how to label it today. Today I just want to show you how different tools can help you find the waves, more or less. Okay, so now that we got our A and we got our three swings, that's labeled by these ovals here. Okay, you have your low and your high and a correction of some sort. Okay, so all this stuff doesn't really matter. Okay, so but this gives us our points for our pitchfork. So that's what you need is our 3 points to get it started. So you click first on the low, click on the high, and click on the correction. Now, there are 3 different types of pitchforks: the standard, the shift, and the modified shift. So I usually pick it according to the projection of the trend that it's been going in. So let's look at the standard real quick. This one's probably the most bullish, and then the next one is the modified, which is less bullish, I'm sorry, it's shift. Shift is the next one. That looks like it fits pretty good. Let's look at the modified shift real quick. And you could probably pick or choose either one. Okay, so let's go back to the shift real quick. Okay, I kind of like this shift one a little bit better because the median line looks like it acted a little bit more consistent along that median line. So I'm going to stick with this one. And remember, let's say when we looked at this chart and we started analyzing it, maybe it was 618 or 619, 620, June 19th, June 20th. And now we've noticed that it started breaking out of this pitchfork. Okay, so anything below the median is starting to become bearish. So now you're thinking, well, do we need to shorten it? Well, if we have our 3 points, we can say we have an A and a B and a C, right? Well, this could be one lower degree. So as long as we stay above this retracement here, we're considered that we're still moving into another degree. Okay, and as long as we stay below or above this oval, that will also indicate that we're moving into another degree higher. Okay, but again, don't really have to worry too much about that. You just want to locate your 3 swings to get your pitchfork started. And now we're going to analyze the moves inside the pitchfork. Now we noticed that as it was moving towards the median, it acted slightly bullish here. It tried to use it as support, but eventually failed. Tried again and really never got bullish enough to retest the high point on the pitchfork. So at this moment, the trade would have been bearish. Okay, but we're already in June 19th, so we're looking to see if we need to continue this bear trend or not. Now this is where it gets tricky, because we're really still looking for a move higher, but because this retracement was 61.8, we are looking to see if this pullback here was bearish enough to get an entry. So is what we need to do is measure that correction, but we don't measure it from these first 3 swings. We're going to measure it from the start of the pitchfork, if you will. Okay, so we're going to measure it from here to the highest point it made inside the pitchfork, which was here, and we got 38.2 right here. So anything, and that's 23.6, 38.2. That's a bullish retracement in my book. So I would have probably, I wouldn't have went all in here. I would have added to my position if it went lower, but I definitely would have taken a long position right at the 38.2 at 140.93. And as you can see, we started to continue higher. Now, remember, we're under the pitchfork. Okay, so we're going to use this as our guide. Now let's get our targets for our next wave, because we have an A and a B looking for a C. So all we have to do is measure this A wave. I don't care about the correction, adding that into my count. So our first target is here at the 123.6 at 147.66, and then the 138.2 at 150.02. Anything around these two fibs, if the wave ends there, that's going to tell me that it's a little bearish, and that we need to be looking for moves or swings down. If we start hitting the 161.8 or the 200 or let's just say the 161.8, that would be a continuation of trend. The 200, the 261.8 would be, you could start to see your in your other studies starting to diverge, like your MACD and your RSI, telling you that this trend might be ending. Not that the overall trend might be over. It's just a bigger cycle with a bigger correction. Okay, but that's a little bit more advanced, and we'll get into that later as I make more videos. So let's say our entry was here, and let's follow the path here. So we hit the 123.6. You can see here we started to consolidate, make a triangle, and let's see, because we started making higher lows here, this would have gave me a good indication, and I'll zoom into this later, but I just want to try to do this as kind of like a fake real time here. So this would have gave me the indication we were going to break higher to the 138.2, and you can see here we do. Now, not only did we break the 138.2, but we broke our lower fib our lower pitchfork. Okay, so that's would have been a nice squeeze right there up to the 161.8, which it hit, and then some. It went right on through it to our median pitchfork that we originally placed, and you can see it reacted to it. Okay, now this, I'm going to put an arrow here real quick. This is significant. This pullback here at the 161.8, now we've used this fib as a support. So this might send us to the 200 fib. Okay, let's see what happens. It hit our pitchfork median there again, starting to break through, making higher lows. This one's, it broke. Oh, well, it hit our 200, I guess. So that's pretty close. So now that it hit our 200 and we started making lower lows, I would have gotten out of position from here. That's the trade. Okay. So not only did you get a successful trade here, now we actually got a wave count too. You have an A, and I think this was probably some kind of triangle here. So this would have been an A, B, or I'm sorry. This would have been an A here, and then a smaller degree, A, B, C, D, E. So we would label it like, perhaps, and triangles are always three waves anyways. So 1, 2, 3 for this A here. Oops. And 1, 2, 3 for this B here. And then it's this little smaller three waves here, but that's your C. And and then D could be here or here. Let's just put it. Actually, it didn't make it higher. Let's see here. Okay, so maybe like this, A, B. Oh, you know what? Perhaps like this, and the C was like this because the triangle is actually I guess a descending triangle, if you will. So let me just draw it out here so you can see what I'm looking at. So A, B, C, D, and then the E broke out. And it's important that you label these as you go, so it helps you find the move later on. So now we have, let me get these out of the way. Didn't mean to spend so much time on this, on labeling, but you know, it really is the best way to analyze charts. But like I said, next week I'll try to do another type of instrument tool, measurement tool. This week focusing on the pitchfork. So anyways, now we have our A and our B, and this was either our C or an A of our C. Okay, so but that's next week. We'll play that one out. So right now we're going to go ahead and put this as an A of C. So we'll label it in yellow. Okay, so I'm anticipating that for Nvda, well, that's right, we didn't finish playing it all the way out, did we? So I'm anticipating that this will be an A and a B, and then C of C when it hits the 261.8. Okay, like I said, we got out of the trade here early, but we would have reanalyzed the pullback, you know, and said, okay, well, from there to there, it's still 38.2, so we could have got in again here and tried to ride this up based on targets from here. This would have gave us right here to the 123.6 and the 138.2. You can see they hit both of them with staying above our A wave, so this was still bullish. It's still bullish right now. Yeah, so there's a little future track to see how you can do on that one. So like I said, I didn't want to get too much into that, and you can see that we're still in the pitchfork, but we're on the low end of it. So that's why I say getting out right here, still a good decision. Okay, the re-entry would have been here and get out already. So there is no entry right here. I would wait to see if it plays out and tries to get to the. You can see how the 261 still is going to be bearish, even if it stays inside the pitchfork here on the bottom side of the median. So yeah, we'll see how that plays out. So let's go to the US dollar, Japanese yen. We're going to do this on the 30-minute time frame again. Okay, so I've already got some stuff set up here. Let's see, what do I have? Okay, so I picked on this one, I've got the shift, okay, which is middle of the road. Let's look at the standard. I'll show you how this one just, it could have been used. But like I said, we are reading charts from right to left. and this pitchfork is still within our, I guess, our target. Okay, so I've already drew in our high and lows. I didn't label it though. I can do that. It's just the white dotted lines there. And remember, you read your support and resistance from left to right. You know, you want to go back to history to find your highs and lows. It doesn't make too much sense to go right to left because you haven't, not enough information. Okay, so there's your high, there's your low. Okay, now we're reading right to left to find our low. There's our low. I got them circled already in the ovals. So let's go ahead and zoom in on this. This is what we're playing. So here's our A and our B. Looking for a C up. I've got the measurements up. Looks like we're in our pitchfork now. So let's see here. Let me just go and get some labels on here. Looking for 3 moves. The reason I'm trying to do different types of tools strategies is because, you know, the market will change, and maybe there'll be a day where 3 moves isn't going to be enough for me. Maybe we do go back to the 5-wave structures, you know, A, B, and then now we're looking for a C up. Okay, so now we need to analyze the movement inside the pitchfork. And like again, you know, I'm hoping that the different tools will help, you know, people find the wave counts. That's my goal, objective anyways. Okay, so now where's the C? Okay, well, first of all, you can see here that when we had your 3 points here, your A and your B, but you have your 3 points for your pitchfork, you can see how your entry is down here at 144.445 or 144.5, and then you just ride it until the consolidation. Okay, remember I said when you read the charts, you want to be able to tell the difference between consolidations and swings. So in the consolidations I have here in these little red channels, so there's one, and honestly, if you're reading the chart right to left, let's see here, well, I guess this is your consolidation here and here. Okay, so this might be an A, B, and then maybe some kind of extension, right? So you can get an A, B, C here, and then another. This whole thing makes up an A, B, and a C. Hopefully you can see the consolidations. Okay, we can go back and label it later if we need to. So, yeah. So when you get your entry here at 144.5. You ride it until you start to see this consolidation. You can get out, and then we can reevaluate. Okay, because you don't want to keep. Let's see. I don't want to say this. I guess until you get familiar with the 3 swings, you can't say, okay, well, I got in here at 144.5. I'll put an arrow for the entry. and then exit here at the 138.2 retracement. And with this strategy, I guess you could say that because we're above the median in the pitchfork, and we're consolidating above it, we can continue our long position. Okay, so with those two indicators, that's enough conviction to continue long. Now that we hit the 161.8 and the top of our pitchfork, because anything outside the pitchfork is going to be telling you that a trend change is coming. Okay, so this is another indication of an exit. So there's an exit, there's an exit, there's an entry, there's an entry, and the only time we exit for a short position is when we stop making higher highs from our swings. Okay, so this original A is our baseline. That's going to give us, as long as we stay above that, we're looking for long positions. Okay, so entries, exit, 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 entry, entry, and now we're gonna exit. If you got this entry here, you exit here. Oh, whoops, meant for an arrow. You exit here as long as we consolidate above the bottom pitchfork. Okay, once we break out, then we need to look to say that, okay, this C wave is over. Now we need to retrace this whole move. Let me get rid of this real quick. So we retrace the A, from the A all the way to the C. Let's say it ends somewhere here, I think it was. Now we're looking for long positions, right? Because we're still above this A. So this 23.6, 38.2, and the 50% all are above our A. Okay. So let's see what else I can add to that. I mean, I guess if you're pretty good at going both directions, then yeah, we could take a short position, and once we get to the 147.85, somewhere around there. Let me put that fib back up there, what that was. This isn't an exact measurement, but it's pretty close. Yeah, it was whatever this 200 is, 147.8. I'll leave it up there, or I'll just cancel the extensions here. There we go. Okay. I don't like it. I'll just take it off. Hopefully you can... Oh, I know what I'll do. It's the 200, yeah. Okay, there you go. There's our target. Like I said, if it keeps consolidating above this 200, then we'll go to the 261.8, which I guess I can put that up there. Okay, so draw your pitchfork, and that'll help you determine if we're going to break the 200 or if we're going to break the bottom pitchfork. That's what we're looking for, those two factors. Okay, so remember, even if we break the pitchfork, we need to have some kind of reaction off of the fibs coming down, 23.6, 38.2, and the 50. Anything past the 50, maybe start looking for a trend change. All right, so let's finish up on the ES, micro E mini, and then we're going to do this one on the 4-hour time frame. Okay, so we're going to read right to left to, well, left to right to find our high and low. So this is the 4-hour chart. This is all the further I want to go back, back to February of this year. That gives us a nice support and resistance line, or our high, and our low would be in April 7th, there, somewhere around there. Okay, now we read right to left to find our low. Let's label them, or put an oval on it, and find our swings. Hopefully you were able to find the swings before I put the ovals on there. Alright, there's our 3 swings. Now let's go through the different pitchforks to figure out which one is better. We'll start with the standard. You can see that we already broke out of that a long time ago, so that would have been a short trade. But remember, we're reading right to left. This has already happened. Okay, we're not trying to say, read into any kind of hindsight. All right, so this is today's date. We're looking to figure out where it's going. So I don't like this pitchfork with that play at all. We're going to go to the shift, see how that looks. It's better, right? But we already broke out of it. Let's see if the modified still fits into play with where we're at today. I like it. It's a lot better. We'll stick with that one, okay? So, let me squeeze in some stuff here real quick. Let's go ahead and label. Do I have it? I don't have it. Okay, let's label our A and B. Hopefully, if anything comes out of it today, you can figure out how to label an A and a B. Whether you get the C or not, that's what the pitchfork is for. So next week we'll do, I don't know, what do we got out on these toolbox here? We can do, well, I'll give it some thought. I don't know. Maybe I'll look into some of the indicators, some kind of studies, try to implement some studies, moving averages or something like that. But when it comes all down to it, it's all about labeling and Fibonacci percentages. All right. So now what have I measured here? Okay, so the fibs that are up right now are the measurement of the A swing. The pitchfork is the modified pitch. So you can tell right away that our move above 200 is in play. So but we are below the median and the pitchfork, so we're a little bit bearish according to the pitchfork. Okay, and we are looking for a C leg, so we're looking for an end of a move anyways. All right, so these fibs tell us our C. So usually to find my C leg, I start from when I find my B, and as the move is progressing, the very first fib that it hits, the way it reacts to it will determine if I need to figure out if that move is done. The touches here on the 123.6 could indicate that is I need to label that as a C, but the shallow correction tells me that this is part of an internal move, a smaller degree. So I need to keep looking. Now the 161.8 looks like it's a good candidate for the intermediate C leg, which is in blue here. Okay. Let me get a C up here real quick. Alright, so let's just temporarily put this C here and look at that for a second. So with this C, could this be an A, B, and a C? Well, let's look at the retracement here real quick. This full retracement gives us, it really doesn't hit any fib coming down yet. I mean, it came close to the 23.6, but it's not all the way there. So I'm not totally convinced that this move is over. So according to the 123.6, it looks like it used it as support and continued its move. According to the pitchfork, it looked like it used the median and continued its run. So I'm thinking maybe the C leg is not there and it's more towards the 200, but we have already broke above the 200 and using the 200 for support. So I think we might be going to the 261.8. Okay. Now we are on the bearish side of the pitchfork. So that doesn't mean that we can't have, let's do this real quick, an A, and hopefully you can see these swings. And a B here, and possibly a C here. Let's see. Let me get rid of these fibs real quick. I'll put them back up later. Now let's check this. Okay, we're going to check it by measuring this first, this major degree A. So we just grab the top of here. This is the Fibonacci extension tool. I mean retracement tool, not the extension tool. And then we measure anything above it. Okay, and you can tell right here we're at the 138.2. We are, it's staying well below it, not even trying to break through. We are on the low end of the pitchfork, the bearish side of the pitchfork. Looks like we even broke out today. So we might be looking for this to be corrected, this major A, B, C. So let me get rid of this. Let's find some targets for that correction. Our first one's the 23.6, right? So that one is at 60.49 or 60.50. The 38.2 is at 58.70. And the 50% is at 57.24. And the 61.8 is at 55.79. And all these are above the original intermediate A. So all of those corrections can still be bullish. Okay. Now anything below that, then we need to start looking like, for a trend change. So anyways, I would think, personally, I think we're going to hit the 23.6, 38.2, and probably continue higher to that 261.8. Let me get that back up there. Let me get this a little bit more accurate here. which is up here. So I can see that maybe we get this pullback to here. Maybe we use this 161.8 as a support, and then we try to, you know, I wonder if we could use that pitchfork and the 261.8 as a top. That would have to happen pretty quick though, right? For those two to intersect. Otherwise I have I'd need to get some other targets up here. The next target really would be like the 300%, okay, and so on. 300, 323.6, 338.4, and so on, or 38.2. But we'll see how it reacts to the 261.8 first, and then we'll go from there. Don't want to jump ahead fibs, right? So let me get rid of this. Let me put that retracement back up there real quick. Oops. Yeah, so the 23.6 is here, 38.2. I'm thinking that zone is a possible candidate for our short-term pullback. Okay, so I know it was a little bit different video, probably a little longer than normal, but I hope it didn't confuse anybody. Like I said, I'm just trying to implement other techniques, tools, along with the Fibonacci sequence and old Elliott wave counts to predict chart structure. So hope that helps, and